Should sellers accept offers with buyer contingencies? Imagine receiving an offer on your home that includes a few conditions you need to check off before the sale is final. You might wonder if it's worth accepting or if you should wait for a cleaner deal. When a buyer makes an offer with contingencies, it means they want to protect themselves by setting certain conditions that must be met for the sale to go through. Common contingencies include the buyer needing to secure a mortgage loan, the home passing a professional inspection, the property appraising at or above the purchase price, the title being clear of any ownership issues, or the buyer needing to sell their current home first. These conditions give buyers a way to back out without penalty if things don't go as planned. From a seller's point of view, accepting offers with contingencies can be a mixed bag. On one side, it can slow down the process or cause the deal to fall apart if the contingencies aren't met. For example, if the buyer's loan falls through or the inspection uncovers major problems, you might have to start over. This can be frustrating, especially if you're in a hot market with many other offers. On the other hand, accepting contingencies can open the door to more potential buyers. Some buyers will only make an offer if they have the protections contingencies provide. For example, a buyer who is pre-approved for a mortgage or paying cash might waive certain contingencies to make their offer more appealing. In competitive markets, sellers often prefer offers with fewer or no contingencies. Buyers sometimes waive financing or inspection contingencies to strengthen their bids. For instance, a cash buyer does not need a mortgage, so they might skip that contingency altogether. This makes their offer more attractive because it reduces the chance of delays or cancellations. When considering whether to accept a contingent offer, sellers should look at the type of contingencies involved and how long they last. Shorter contingency periods mean less uncertainty. It's also wise to evaluate the buyer's financial qualifications to see how likely they are to get approved for a loan. You should consider your own timeline and whether you're willing to negotiate, repairs, or address appraisal issues. Ultimately, sellers need to weigh the risks of accepting contingencies against the chance of receiving a non-contingent offer. If the contingencies are standard and the buyer is qualified, accepting the offer can be a good move. But if you have other offers that are cleaner, you might prefer to wait. Each situation is different, and understanding the specific contingencies involved helps you make a smart decision. Remember, negotiating terms to shorten contingency periods or requiring proof of qualification can help protect your interests. Accepting offers with contingencies can be reasonable, especially if you're comfortable with the conditions and the buyer's reliability.